Yeah, so when you're talking about your taxes, everything kind of falls into three basic categories. You have active income, which is usually like a W-2, your trade or business income. You have passive income, which is the default for real estate, and any other business that you own but don't participate in. And then the third option is usually just investment income. That capital gains are kind of a quasi section for that. It could be part passive, active, or or getting in the weeds here, but or it could be investment. But at the end of the day, some of the best tax planning strategies come from putting all of your income in the same bucket. So if you make, active income, you would want to try to have your deductions in that same category. And a lot of times real estate can provide that. So real estate professional status is a really unique thing. You might have a mortgage broker making $500,000 a year or something like that as an example. If they can qualify as a real estate professional, that will classify all of their income or losses from the real estate as active. And so what that means is they can go in and buy something like a car wash and use that depreciation to offset their huge amount of income they made and basically defer that tax until the day they sell, and continue to reinvest their profits, um, basically tax free, um, and just build their portfolio that much faster.
Yeah.
And so there's two ways. There's two ways to make your real estate income active. Is one is real estate professional status, and number two is if you operate a short-term rental and are actively involved in the management.
And that could be like an Airbnb, that could be many different things.
Correct. So yes, an Airbnb is a great example. Um, but basically there's a couple there's a couple of distinctions with that, but basically the cold hard rule is if you participate over 500 hours in a year, and you can group your activities, so it doesn't have to be per rental, but in total, you can offset like a W-2, for example. And so sometimes we'll have a spouse who operates the Airbnbs and generates losses there, and then somebody with a big W-2 generating income, and they're, since they're spouses, they could kind of share those two tax benefits between each other.